Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's December the 14th. We haven't had a chart lesson for a few days now, so but I got through with all my jury duty stuff last week, so I guess we haven't had a chart lesson since Wednesday, I believe it is. So apologize, but we'll be back on track this week. Um, Really wild and crazy day. For the most part, this is just a range day, and most of the price action was between 1998, 50, and 2009 and a quarter, somewhere in that range. So maybe 11 points, but you can see uh, we broke lower for a while, and then we rallied back, and we got right back in the range, and we broke out a little bit in the afternoon, and ended up by the time we closed, we were back into the range though. We moved higher since then, so just a crazy day, and it really got volatile right in here. And, I don't know what caused it. I'm sure there's probably something out there they've posted. They write, a lot of times they write the news to fit the price action, so I don't pay a whole lot of attention to it. I don't really care. But there was no high volatility news item. There were a couple of news items, low volatility around 10:30 or something today, but that's down here when the market reversed. So I don't know what caused this. Maybe there's something out there I haven't looked, but maybe something happened somewhere that created this, but it got really volatile. It just dropped and then shot straight up and then shot down, and we ended up getting a second leg. You can see there's leg one. We didn't quite get a measured move, but that generally leads to a big reversal, and you can see we had a pretty good reversal there. So, and then I also would have measured this one like so, and then when we went lower here, you can see we pretty much got a measured move there. We might have went a tick or two further on that one. So, but for the most part, it's just sideways and right in here. I like these range kind of deals though. And I get this question. Let me address this before I forget. People ask me a lot about when I switch contracts, and I don't always roll over on the first day. I generally wait until the volume has switched over before I will change. So actually, before 8:30 this morning, I traded the other contract, and and then right around 8:30 when it opened up and it just still didn't continue to give me much volume, I switched over, and you could see the volume was really in this contract. I probably should have started trading this contract right out of the gate, but it wasn't nearly. Um, it was just much more pronounced and easier. I mean, to me, the other one was much easier to trade this morning. Just the support and the resistance was real clear, real obvious, and it wasn't so volatile. But that's because most of the volume had switched, and you probably should have been trading this contract. So anyway, I went ahead and put up um, the early morning contract, or the I shouldn't say that. The early morning when I traded, I went ahead and put up the December contract, but I probably should have. Uh, I went back and added the March a little bit later after I thought about it a little bit, and I got a couple of questions about which contract I was trading. I should have put them both up probably since I traded the other one. I really probably should have just put this one up and been done with it. But generally, I will trade. It won't be. I won't switch the first day. It's usually a day or two after before I will switch. But generally, whenever the volume switches, I'll switch. And notice that I did go back to the 6,500. Maybe that was part of the reason the volume was. The bars were so big and the volume was kind of out of whack for a little bit there because it was during rollover, and a lot of those big um, hedge funds and big traders, and they start rolling over pretty early because they can't roll over all at one time. Or if they do, the market takes a dive or takes a huge run up, depending on whether they're exiting and re-entering, whether they're exiting longs or exiting shorts, or re-entering longs or re-entering shorts. Um, so it takes them a little, a few days for all the volume to switch, and so generally it's a day or two after when I switch. So enough about that. But anyway, let's talk about the trades. It didn't really change. It didn't matter early on. Both the charts looked just like pretty much like this. You had the move down, and then we were just going sideways in the range. So it didn't matter which one you looked at. There were a few more bars in this one early on, but other than that, the other chart was a little bit more pronounced as far as the support and resistance. So it was a little clear what to trade. But once it was clear the volume wasn't going to be sufficient, then you got to switch over. So it kind of forces you to switch at some point. So uh, once 8:30 hit, really it was closer to 9, but once that hit, I switched over. So, but I was pretty much done by then. It was a pretty good morning, pretty easy to trade. Um, I did try to make the bars a little smaller, a little easier to see. Maybe that's even better. You can let me know which one you like better, but I'll leave it like this. It's a little easier to see. Um, but let's talk about the trades. We had the trend working down. It looked like we had the break early, but it just kept going. We got another break here and then a move down. And early on, I actually had the support here. Notice you get all those touches across there, and you got it's actually support, support, support. So this was a failed second entry short that bounced right off that support area right there. And we were a good bit away from the EMA, so that's a nice entry right back. And this thing just keeps going, so a runner would have been great. You back up here, you get a second entry right here, but look how bearish that bar is. I don't like that. And then you just kind of go sideways. Uh, this bar is way too big, but then you get a little pullback right here. I would have liked this much better if this ticked lower and then turned up, but you're looking for a retest of this high and maybe even all the way back up to here. So I like this one. Uh, it tests that EMA a couple times, ends up giving you a nice bullish bar. You may not have got in this. You had to use a limit order and put it where your stop would have gone to catch that one. So you may not have caught it anyway. It just kind of took off. This is where it kind of got volatile right here. It just was doing nothing and all of a sudden rockets up. So, and the market really just kind of got real volatile right in here. And then we get up here. It's tempting to want to go short right here, but that's all sideways, all congestion. It's not that far back to the EMA and it could bounce there. So I think you're better off to skip it. It runs down and then it's tempting to go long as well. But again, it's not real clear what's going on. There's some support here and it's like a little failed break lower. It's a really small bar, but it closed more neutral than anything. It's a little ways away from the EMA. But if you were using your shorter term trend lines, you got a little break there to new low. So there's some thinking why you might go long. I could probably make that one green. I will make it green just because if you want to be real aggressive. And somebody else sent me an email and said they wished I wouldn't do green, that I'd only do red or blue. But the reason I like to do the green ones is because there are people that are more advanced. Not everybody are beginners. Some people, and if I don't mark these or mention them, I start getting emails about them, and I'd rather address them in the video where you can see the picture and you can see and I can explain it. If it's a little too advanced for you, don't get caught up in it. Just listen to, you probably can still learn something by listening to me explain my thought process on it. But don't, if it doesn't make sense or it's a little confusing, just skip that trade and, make sure you concentrate on the red and blue ones. And then when you do get more advanced, it's there and you can study it. But that's the reason I talk about them. So, but you can clearly see that little tight little channel working down there, and you get a little break right there, move to a new low, and it's a little bit away from the EMA, and there's some support across there. So there's some reasons to think about going long. I think you're better off to wait, but it shoots right through the EMA, pulls back, tries to go higher, and then turns down. So that's like there's a failed second entry long there. Notice this is a pullback. It's a first entry pullback. There's a second entry right there, and it fails. I like going short right there. You could have waited on this bar and waited on a break and then dropped the limit order back where it was. But I just like putting a stop there on those traps, and this thing just shoots on down. And you figure it's probably coming back down here, but it bounces a little higher here. You go up, you get a break of the trend line here. And also that touch right there, I didn't mention it, but that confirms your trend line. These first two swings here set the trend. This confirms it. Big bearish bar, go short right there. But anyway, then it bounces, you get a break. Um, there's a little, there's actually quite a bit of resistance right there. And that's where I originally had this bar right here. And notice this was like a little failed break higher too. But that was another reason I didn't like going short, because it was right back into this. It's kind of acting as support and resistance. And that's another reason to like this one, because the resistance there. But you see that resistance again, that's the first break of this channel. It's a good bit away from the EMA. It's slightly neutral bar, but I still liked it because it's a second entry short. You could have waited on this one and waited on the break and dropped a limit order, and you still could have gotten filled. But this is one if you're not already out of, I like adding on to it, because you figure prices are headed down here, and that's exactly where they go. You don't know if they're going to go that fast and that quickly, um, but they do, and they just kind of rocket down. And then this is where it really got volatile right here. It bounces off here. No secret to why it bounces here. That's where the support was, and that's where I had my line. And notice you get a little failed break lower, but you're almost always better off to wait on a second entry. And then your second entry is not a great signal bar. It's got a bullish slant to it, but it's a little bit away from the EMA. You've had your break and a move to a new low, and your support still seems to be happening here. It's a second entry, counting off the low. And so I like that one, just to thinking you'll at least catch a scalp back to the EMA, but it just shoots on through. And, you know, generally I would say you want to go short here because it's a failed break higher. But look how big that bar is. Somebody sent me a tool. I didn't put it on the new chart yet. I'll have to look at that. But somebody sent me a tool. Um, I'll ask them if they mind me sharing it. I don't know if they will or not. I probably shouldn't mention it until I ask them. But they sent me a tool that'll measure these bars. So um, I'll check on that and maybe share it with you if that person is okay with it. So, but it's a huge bar. That bar is actually 2013 to a little less than 2008. So that's a 5+ point bar, and and it moved really quick, printed really quick. So, you know, it's risky going short right there. Still a long way away from the EMA, but for whatever reason, it just got really volatile. It felt a little volatile right in here, the way it shot up and turned down. But man, this made that seem like child's play. It really kind of started here, and then so I don't know if the market just wasn't sure what was which way to go, or if there was some, like I said, maybe there was some news that came out. There wasn't any scheduled high volatility news, but that doesn't mean that something wasn't mentioned. The Fed said something, or it could have been anything. It could have been some terrorist thing in the Mid East or anywhere. But sometimes that'll throw the market off, and it doesn't matter. All that matters is it got volatile. And because even if you know the news or you go look at it, it doesn't tell you anything. So I never worry about that kind of stuff. So don't worry about it. Just know that when it gets volatile, you may have to step aside for a little bit. But look what happens. We had a failed break higher. So what's probably going to happen on a range? This is a range. It's real clearly a range at that point. Look at it. It's just going sideways. Look at it swinging back and forth below the EMA. So it's a range. So when we start heading down here, where are we probably headed? We're headed to down here. And you might have probably even moved this down a little bit. You can see you get more touches there now in the last few closes. So we're probably headed down here to test these lows again. And so if you can catch that, but you get a good chance to catch it here. Notice what happens. You got a new high. Pull back, first entry, and look how it went right through the EMA. This is a reversal type pattern. Pulls back, tests it, tries to go lower, pulls back. You get a second entry long. It fails. It's all below the EMA. Look how bearish that bar is. Just go short right there. And this is a good chance to add on. It's like a spike in a little channel working down here. And here you could actually treat this like a new channel. So you get a failed second entry long, and it's right off the trend line again, and you're still looking for prices to go to at least here, and maybe even all the way down to here. And there's plenty of room there, so I like that one. And then of course we get down here and it fails, And again, it's tempting to go long right here, and you're way away from the EMA. So you technically you could. It's a little aggressive. I will mark it, but it is a little bit aggressive. And also I would have drawn this trend line here, and you get a confirmation of it here. Um, this first two kind of set it, and this kind of confirms it. But look at all those dojis, and everything's just stacking up. And when it pulls back here, it doesn't break higher, and your lows are down here. This is just too big a bar. So this is not very bearish either here. So I think you're better off to wait. And it does come back and right off the trend line. Look at that bearish bar right off the trend line. And you got enough room to get out before here. And maybe it's going here. Maybe it's even going to make that new low that we're looking for from this channel coming down, because I wasn't clear if that was the channel or that was the channel. And still not real clear, but there's a chance you could be trying to make a new low for the day. Um, but anyway, nice chance to enter here. You probably would have scalped out on that one, but then it gives you another chance to enter right here. Notice how it's still kind of acting as support, but it pushes through, pulls back. That's a breakout pullback, but look how bearish that bar is right there. I like going short right there. If you tried to use a limit order, you got left behind. But it's a clear channel here, and we should be working down to the other side. And we could be getting a measured move lower, similar to the channel as well. And even if you just measured off right there and there, that puts prices way down here. And you can see we didn't quite reach that, but that would have given you a target to be looking for. But I like the two-tiered channel here and looking for the target on it, which puts it the measured move way down here. And so that gives you a little more reason. You got to at least here. And that's really, and this one's even a little bit lower than that. So it could be that we're going test it all the way down. And it just keeps going down. And you might have, you want to think right here, you might even enter, but you're getting right down there to the low of the day. You've had a pretty big move down. You didn't have a measured move yet, which again, I showed you that one a minute ago. You didn't quite have a measured move, so there's some reasons to consider here. I will say, especially when it ticked back higher there and then turned down, these midlines are not nearly as reliable as the trend line and the trend channel line, so you got to be careful on them. But again, that's one I would probably make green right there, because there is enough room to get out. It's just a little questionable that we move so far down. Then we just we're going sideways, and look what happens here. We push back, we kind of push it. Look how it gaps right over that EMA, it pulls back. And it's tempting to go long right there. That is a failed second entry short, but it's just stacking up there. It's not clear whether we're going to get back through that EMA, but when it tries to go lower again there and turns up, I like that one. And actually, you probably could make this one green, and this might be one where you want to add on. So, because that is a failed second entry short right there. Notice it. There's a new low, pull back, first entry, pull back. There's a second entry short right there. It works, but you can still treat that like a failure. And generally, you would expect that we're going back up here anyway, because the EMA is right there and the midline on that two-tiered channel. I was a little bit hesitant of it though, but it does meet the criteria for a little more aggressive trade. But here's the one I definitely enter here, and if you're already in, I'd add on right there. And you figure you're coming back to here, maybe to this level, and if we get through, probably all the way up to here. And that's exactly where it goes to. We actually go a little further. So this is one of those great entries. I'm always talking about it. If you catch them down here, sometimes you catch the low of the day. Generally, and there actually is a little bit of some support across there. You can see that support, and this was like the little failed break lower that sometimes if you catch, you can ride it all the way out. At this point, I wouldn't. It does overshoot down here, but I think it's a little risky. It's not a lot of room back to the EMA, so I'd skip those two. But you get your two opportunities right here, and um, and then it's coming back. And this one is really a kind of like a breakout pullback long. There's some resistance right across there. It kind of pushes through, pulls back. But you can also treat this like one leg back, pull back, second leg back. So it's like a two-legged pullback to the trend line and a nice bearish or bullish bar there. And you haven't had a break of this trend line right here. So I like it, thinking that prices are probably heading up here. And we end up getting a break before we get to the high, but sometimes that'll happen, and then you'll pull it back up to the previous high and find your resistance and turn down again. And there's a second entry long right there. I don't like this necessarily for the second entry long because look at that signal bar. It's not very pretty, but look at all that support across there and look at it catching again, and you get that little push through and you get a perfect double bottom there. Plus it is a second entry long, so when you combined all that, I like that one. This one's real close to being green because of that signal bar, but there's enough reasons there that I like that one, figuring you're going to push on up and test this high, and maybe even get lucky and test this high. And you could even get lucky and test the high of the day. You don't know, but you know that's what prices tend to do. They go back and test the previous areas, and it comes up and it ends up finding resistance right across here. It's actually like a failed break higher. And it's tempting to go short here, but that's a huge bar. I think you're better off to wait. It does pull back, but it just ends as kind of a neutral bar, a doji, and then you got 3 or 4 bars stacked up there. It's right into the EMA, so I think you got to wait. And you do, and notice you push through the EMA, pull back, and test it, and that confirms that trend line. And it goes higher first and turns and goes out the bottom. Just go short right there. It takes a few minutes to get going. You end up getting a break here and a move to a new low, and then it reverses. But it works out. I don't think I would add on to this one because by the time you get to add on, you're right back down here to the support. You don't have a whole lot of room. So this might have been one, once you saw these dojis right here, you might have just taken what you could get out of it, a tick or two, and just exited. But if you held on, it worked. You didn't have a break of the trend line yet, but sometimes it might turn back up and, you know, take your stop out before it goes down. So a lot of times, this gets real questionable because when you start monkeying with your trades, a lot of times you'll jump out of a perfectly good trade, which is what would have happened here because it would have worked out. But if you get one doji and then another one closes in there too, when this one ticks back down in here and gives you a tick, I'd probably take it, especially when it pushed higher. Of course, it probably went down before it pushed higher. I can't remember. But anyway, now you get your break, a new low, and look at that double bottom, that little failed break lower, and look, and this thing, what this does, it turns lower and goes right out the upper side. Just have your stop waiting there and go long. And then you could have waited on this one to break higher and moved your limit order back down here where you would have entered before, and it would have filled you and pushed up. And either way, you get out of that one. Then it pulls back, and I don't like the second entry there off the low. It just looks more sideways. Everything's still below the EMA, and it's just kind of going sideways. So we're kind of stuck in a range there here. And notice this one, it pushes up, it comes back down. You kind of got a little double top there, but you're better off to see if you get a second entry. And you do, it pulls back and it tests that again and then turns down, and you get a fairly bearish bar here. Let it break below this one and put a limit order back here where you would have had one for this bar, and it just keeps going down. You figure it's probably coming down to here. It doesn't. And it bounces and it just turns into and by this time you've moved this line up, you can kind of see that working across there. I would have still had it here at this point. And when it doesn't even get there and it turns up, You want to go long right there. Look at that bullish bar. You got all that support across there, and you can see when you move your lineup how it clarifies that, and it bounces right there again. And you figure it's coming to here. Maybe it gets through and goes up here, and all you need is for it to get 4 ticks. But if it comes all the way to here, you might get more, and it just shoots on through there. Turns out to be another good trade, and turns out just to be kind of a midline between this high and this high. So your afternoon support and resistance was a little bit different than your earlier morning. Actually, this one was pretty much still the same, but your lower one, it actually dropped lower. It was actually started out lower and worked up, and you can see that it's real clear across there. And that got you into the 2 o'clock hour. So interesting day, it really was. I mean, it's been just some interesting trading lately. They're talking about they're going to raise rates on Wednesday, the Fed is, and if they do, I think the market looks like it's probably priced in a interest rate hike. But if they don't raise rates Wednesday, we could see a super rally. Who knows? Because it looks to me like they've built in a rate drop the last week or so. I mean, we were almost back to 2,100. Now we're back down to 2,000. We actually fell below that today, so it feels like they've built in that rate hike. And that's the thing about the market. The market is very efficient, and you can't wait for the rate hike to take effect and then expect something to happen. That looks like they've already built it in. And if it doesn't happen, then they're probably going to take some of this back pretty quickly. So that's my guess. Never trade on that, but that's just something, my experience tells me that's probably what's going to happen if there's no rate hike. If there is, it might still get a little rally because we could be overdone some. We'll just have to see. But it looks like to me that they built in a rate hike over the last few days. So we'll let it play out and we'll see if that turns out to be the case or if I'm wrong. Doesn't matter. We're not going to trade that. We're going to trade what we see. But as you do this and you get experience, you'll start to be able to have an idea of what's going on with prices and what's likely to happen with prices and that kind of stuff. So, but almost 30 minutes worth again today. Lots of trades here, so a lot to talk about. And again, it was a fairly volatile day. But yeah, if you haven't switch over to the March contract. There's not enough volume left in the other one now to really pay any attention to it. And what else? I did go back to the 6,500 volume because it's gotten a little volatile. 5,500 just seemed like way too many bars. And I looked at the 2,000 tick chart, and man, it was kind of crazy. Well, I took it off, I guess. So not there. I thought I did have the 2,000 tick chart on here. But it had some huge bars, and it didn't look any better than the 6,500. So I'm going to stick with the volume chart for now. But anyway, I'm going to wrap it up for today. Um, just trying to think, nothing much else we can talk about today. We'll trade into Wednesday. We'll see what the Feds are going to do on Wednesday. Wednesday could be a firecracker day. Tomorrow could be a firecracker day. Today was for all intents and purposes, because even though we mostly went sideways and we ended up closing up slightly from Friday, not very much, but we were all over the place getting there. So we'll see what tomorrow brings. But I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.